Video, we'll be going over a CP14 notice. That would be issued by the Internal Revenue Service. So this is the first in a series of videos that we'll be producing to discuss different types of IRS correspondence that you may receive as a taxpayer. In this case, CP14 is a notice of unpaid taxes that the IRS is sending to you. In this case, this is a completely fictional form. This was actually on the IRS website as an example. So we're going to walk through this step by step in case you've received a CP14 notice, and that way you can know what's detailed in the notice and what you can do to address your situation. So as I mentioned, this is an assessment of unpaid tax, or this is a notice that you have unpaid tax. So the first thing that I would do is take a look at the top right corner. You'll get some information. So CP14, you can Google this term and you'll find some IRS resources of what you can do. Specifically, since this is a notice about unpaid taxes, if you go to the IRS website, it will link you to a bunch of different resources about how to pay down your tax bill. So the other information that I think is important here is the notice date, specifically because over the course of any correspondence or series of back and forth with the IRS usually uses a notice date in its documentation when preparing a case against a taxpayer. So let's imagine that you're in a situation where you disagree with this, whether it was assessed in a proper manner or if you disagree with the tax bill. There are certain timelines that occur, and a lot of them may be initiated as of the notice date. So according to the IRS website, you should read this notice carefully. It'll tell you how much you owe and how much you should pay. It'll tell you a due date. You can set up a payment plan if you can't pay the full amount that you owe, and you can always contact the IRS if you disagree. But let's break this down a little bit more. So in your notice, you should see your Social Security number here. You should see a phone number to be able to contact the IRS for specific questions. This will likely be contact information for an IRS revenue officer, and that person, their primary job is to get you to pay taxes either by setting up an installment plan or a payment plan, but they're going to ask you for as much money as possible. That is their entire job, is to collect tax revenue and really put a hard sell on taxpayers to pay as much as they can, even while setting up a payment plan. So you can also submit an offer in compromise, which basically means that you can't afford to pay the entire tax amount, but you're willing to make some payment in exchange for the IRS forgiving the rest of your tax debt. So in this case, John and Mary Smith, they have back taxes that they owe in the amount of $1,075.21 from their 2017 tax return. This was a notice as of January 30th, 2018. So, obviously this is a fictional example because the taxes due for a 2017 tax return would have been paid along the way, but your final tax bill for that year would not have been due until the tax filing deadline. So in the billing summary, you should see all the information that you need. So the original tax that was owed, payments and credits. It doesn't show exactly where that came from or the dates on it, but you can go down and see a little bit of information about some of the other assessments and how all of that came about. But what you won't see in here is how that original tax bill was calculated and then the details of your payments and credits. So at the very least, if you keep pretty good records or if you have a copy of your tax return, you should be able to match this up. And this would be the first thing that I would recommend you look for. If your tax records show a difference between what you have and what the IRS has, then that could be that could be something worth exploring. Assuming that this is correct, we'll go through the rest of it. So a failure to file penalty means that this was a late filed procedure. In this case, because the failure to file penalty is 5% of an outstanding balance for every month or part of a month that the tax is outstanding, this looks like this was within 60 days. So between 30 and 60 days. So that late failure to file penalty appears to be somewhere around 10% of the total tax owed. So there's a failure to pay penalty, which is a little bit different. The failure to pay penalty is 0.5% of a tax bill for every month or part of a month that it remains unpaid. The interest charges would be accrued on a daily basis on the outstanding tax and penalty. And then at the bottom, there's also a failure to pay estimated tax penalty. As most people are aware, not only do you have to pay your full tax bill at the end of the tax filing period, you are supposed to pay estimated tax along the way. For most people, this isn't a big deal because you complete Form W-4 throughout the year or some variant of that withholding form if you're receiving a pension. And your W-4 should have some withholdings, should be close enough to get you around your tax assessment for the year without penalties. A lot of time, failure to pay estimated tax, that falls on self-employed individuals, people who have maybe, kind of a one-time event early in the tax year and they didn't account for paying taxes on that. So if you sold a humongous amount of stock, if you recently sold a business, anything that results in a large capital gain or a significant taxable event, then you should probably sit down and figure out what estimated tax you should pay with that event, particularly if it's in the first half of the year. So again, this may not reflect any balances that you paid within the last 21 days. So if you did pay your balance in full within the past 21 days, you can disregard the notice. If you have an installment agreement in place for this particular tax year, then the IRS encourages you to continue with that agreement. So if you're a debtor in a bankruptcy case, then this is a notice for your information only. It's not going to be looking for payment outside of the normal bankruptcy process. So you shouldn't receive another notice while there's a stay of collection while you're going through the bankruptcy process, and you shouldn't receive a notice after that. So what you need to do immediately, basically the IRS is telling you need to pay your tax bill. So this is how much you need to pay. They've indicated the date to avoid additional penalty and interest charges. Obviously, we've already accrued penalties and interest. So in this case, you would be paying as much as you can, as soon as you can, to mitigate any further damage. They give you a payment stub so you can mail your payment if you want. You can also go online. If you have an IRS account online, you can sign or you can view your notice because if you have an IRS account, your correspondence gets posted to your account as well as mailed to your address. You can get paperless notification for certain notices, although the IRS will always send paper form in certain situations. You can also sign up for email notifications. So let's see. If you disagree, you can call the 800 number that should be at the top of your CP14 notice. You can go over your account with your representative. So you should have your tax information. The representative will have access to your IRS account from their perspective. And again, you can talk about your taxes. If you feel like there's been some sort of a mistake in the process itself, you can request assistance through the IRS, the Taxpayer Advocate Service. That is an independent arm of the IRS that purely exists to make sure that taxpayer rights are being upheld, and that during the collections process, the IRS does not run afoul of either federal law, Treasury regulations, or their own instructions. So again, you can pay for free if you choose a debit card or a credit card, or a bank payment or a debit card. If you use a credit card, you're going to pay a credit card processing fee. The IRS passes that on to you. Again, you can talk about a payment plan, setting up a payment plan when you call the IRS. You can also talk about what an offer in compromise might look like. So the rest of the form basically talks about your penalties and how your penalties were assessed. So again, the failure to file penalty is, it says a 5% monthly penalty for up to 5 months. Now, if you are also being assessed a penalty for late payment, then the failure to file penalty ends up being capped at 4.5%, and then the late payment penalty, which is normally 0.5%, those two are combined, so you would still see a 5% penalty for that time. So once it fills up, there's a maximum of 25%. That is the maximum that the IRS can assess for a failure to file penalty. Now, if the income tax return is more than 60 days late, then the minimum penalty is $210, or 100% of the tax that you should have paid on time, whichever is less. So if we go back up to here, we see that the failure to file penalty is $318.30. So even if that was possibly within 30 days or 60 days, we're still paying more than that, $210. The failure to pay penalty, again, is 1%, not 5% per month. So the due date for paying increases in your tax is within 21 days of the notice demanding payment. So if the IRS issues a notice of intent to levy and you don't pay the balance due within 10 days of the notice, then the late payment penalty increases to 1% per month. And then again, there's an additional explanation of the total failure to pay proper estimated tax. This would be covered under IRS Form 2210. We'll put anything that is discussed in this video, we'll put links in the show notes to the respective video or articles that we've written. So the IRS can work with you to remove penalties in certain situations. So you would need to submit your request for consideration. You can request penalty abatement. We'll put a link in the show notes to that form. So that would be on IRS Form 843. So that is a claim. That would be the claim for a refund and a request for penalty abatement. So let's see. If the IRS gave you bad advice, like if you were penalized even after you followed instructions from the IRS, then the IRS can remove the penalty if you can follow this guidance of you wrote asking for written advice on a specific issue. If you gave the IRS adequate and accurate information about the issue, if the IRS gave you written advice, and if that was relied upon, and then you turn around and got penalized, then you can also request that removal of penalties on the abatement form. So now there's the section below penalties is the interest. So the IRS is required by federal law to charge interest on outstanding tax bills, as well as any penalties that are accrued. So the interest is calculated based on the interest rate environment. The IRS is required to show the periods of time in which interest is being accrued and what the interest charge was for that period of time. So in this case, from October 1st of 2016 to December 31st of 2016, the interest rate was 3%. And then apparently starting on 1 January 2017, it stayed at 3%. So there's additional information. This is kind of boilerplate. What happens if you owe $100,000 or more? Well, congratulations, you're in Wesley Snipes territory. You get special consideration, which means the IRS is going to be really hounding you to make sure that you get your taxes paid down in a timely manner. So there are a couple of frequently asked questions if you went to the IRS website. So if you live in a disaster area and your address of record is located in that disaster area that was federally declared, then you should receive a separate disaster relief notice. So that means that should give you additional time to file your tax return and to make your payment as listed on the notice. You don't need to do anything additional to get the extra time to pay. It's an automatic granted extension. So if you have a financial hardship, there is a process where the IRS can temporarily delay collection for certain periods of time until your situation improves. Again, you should probably call the IRS with that question about how they can walk through that situation for your case. You can call the IRS if you disagree with the notice. And let's see, if you pay the full amount by the date that is on the notice, then you should not be subject to additional interest that is not already claimed here. So right now you would be liable for $145 of accrued interest, but if paid by this date, then that would be all the interest that you would pay. So, and then even if you do set up a payment plan, just understand that you will receive a late payment penalty if you cannot pay the full amount on time. So, and of course, interest will accrue on any outstanding balances. So, as I mentioned, we'll put links to articles and videos for relevant topics or tax forms mentioned in this video. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our channel. If there is a CP notice that you have a question on and I have not created a video on it, please contact me either in the show notes. I try to get these notices from the IRS website, but your CP notice may not be available on the IRS website. So if it's not, I might ask you to give me a sanitized version of your form, and I can make a video out of it. So thank you very much and have a great day.